Welcome to the 5-Minute Trading Edge, brought to you by the Institutional Edge System. Well, I don't know how many of you are history buffs. I happen to love history personally. It was the Battle of Marathon when the Greeks took on the Roman Empire. I won't bore you with all of the details, but the Greeks were severely outnumbered by the Romans. They ultimately ended up winning and starting to turn the tide of the Roman Empire. Now, this is notable because they did it using a pincer move. They outflanked the Romans, and they got the Romans to fall for an initial spike or attack. Now, if you're a trader, you see initial spikes in price all the time. And what's sitting in the back of your mind, if you're like millions of retail traders out there, is you're wondering if this is in fact a real reversal. You've fallen for reversals that didn't materialize or didn't quite pan out in the past. You've gotten burned. If you've leaned on lagging indicators, well, it's difficult to know. And it's difficult really to know if you're getting a reversal early or if you're getting it late and it's already petered out. So as price moves along here and you deal with things, say news events, there's a jobs report right there. You see price spiking, it goes up. You're wondering when it's going to back off and come back down. Well, it's really difficult to know. Well, there is a way for you to outflank reversals with your retail trading account when you're dealing with the big institutions, just like the Greeks did, taking on the Romans. But you can outflank reversals, and you can do it in a way that helps you avoid falling for fakes. It allows you to get in early and fast, and it also allows you to exit on time. And yes, exit on time with victorious profits. What are we talking about here? Well, take our chart that we were dealing with before. As price is plotting along on the ES, we approach the jobs report, we see the regular spike that we have, and then over the course of our 7-minute chart here, so really over the course of an hour, the market starts to respond as it digests what in this case was a bad jobs report. As price comes up here and then ultimately comes down here and then ultimately comes down here, how do we know where the reversal point is? When price is going to pivot and the market will return to the levels or the relative levels that it was dealing with before. Well, thanks to order flow sequence tracking, we can monitor essentially three things that are really important. The first one is COT, commitment of trader. This tells us within any given candle or bar where the most volume is going off. The next is sequential decline. If we look at the tips of the candles at the top and bottom, we're able to see if in fact there's tapering activity. And then finally, responsive activity. This is when the other side senses that there's a reversal in swing and they start to step in. What we're really interested in is those institutions sensing the reversal, stepping in, and then getting in and trading with them. So here's what this looks like. This is our second drop of the day after that jobs report. So here it is up here. Now, take a look at this as this progressed. We have price coming down, but look at this bar here. This tells us with these red numbers below that the sellers are enjoying a run right now. But as we come down here, this is the sequential decline we're looking for. 3384, 3003, 1046, and 41. These are sellers that are backing away from this price. And this is responsive activity, 333. These are buyers that are now stepping in. Now here's another really important detail. You see this red area right here? This is the value area. This is where most of the volume is taking place. But as I extend below this line with volume at price, this is value area low. And at this point down here, this value area low, I know that I'm in potentially oversold conditions. I monitor this here. I'm looking for activity. I see the COT is down here. This tells me that the most volume is taking place. We're ready to head back up. That is a genuine reversal. So you might be asking as you look at this chart, why not this one right here? Well, this is right in the middle of the value area. Where all the volume's taking place, that's still the chop. I'm going to avoid that at all costs. I want to see this go below value area low. That's the reversal condition I want to take. And then I can move in advance just like my Greek army did. Outflanking reversals. Don't fall for the fakes. You fall for a fake, you'll get caught in the chop. Go in with at least a combination of two. That is sequential decline and the COT, sequential decline and responsive activity, or a combination of the two. Even better when you have all three, like we just had down here. As you're progressing, watch the value zone and watch where price is ultimately at. If you'd like to see how you can profit by outflanking reversals, watch our free 4-part training at institutionaledgesystem.com. Thanks for your time.